Hello and welcome to Malakhi K's Minority Report. The goal is to review major news from the cannabis sector with some critical analysis. Today we will be reviewing the last week's earnings from Canopy Growth, Trulieve, Village Farms, MedMen, Acreage, Tilray, TGOD CWEB, Alefia, Sundial, Harvest Health. All articles are linked in the description. We begin with Village Farms. Their Canadian cannabis joint venture more than doubles sales to CAD 32 million with an all-in cost of production of 65 cents per gram, an EBITDA margin of 78%. These are great results. Share price jumped $2 on the news, but gave it back based on macro conditions. Watch for it to run when the sector corrects. MedMen, system-wide revenue of 61 million, representing an annualized run rate of approximately 245 million USD. Company is now on track to achieve an approximately 30% overall reduction in corporate SG&A from the December 2018 quarter, surpassing initial target reduction of 20%. The company is also licensed for 92 retail stores. MedMen spiked on the news and is holding above where they were pre-announcement, but are still succumbing to sector weakness. Acreage reported second quarter revenue of 17.7 million, a 501% increase compared to the same period in 2018. Pro forma adjusted EBITDA was a loss of 12 million. SP saw a small boost and is currently getting crushed. Just a reminder, arbitrage currently at 61%. Tilray revenues rises 371% to 60 million in the second quarter compared to the prior year. Canadian adult use revenue nearly doubles to 20 million. Tilray's continued losses become the focus, and SP reflects that. The Green Organic Dutchman achieved revenues of 2.9 million, which was a 20% increase over the prior quarter. SP falls off a cliff, but they get a bump late in the week after their first recreational shipment to the OCS. Alefia Health quarter-over-quarter gross profit increases to 2.9 million, adjusted EBITDA improves to loss of 2.7 million. They do have 58 million cash on hand. Not surprisingly, the SP does some cliff diving of its own. Sundial Growers generates 19.3 million net revenue in quarter two in its inaugural release. Puts it right up there with Columbia Care, which makes you respond, who? SP had a boost on good numbers until news that the company had a half ton of bad weed returned as it was going public. Trulieve, record revenue of 57 million, an increase of 30% on sequential quarter-to-quarter basis. Adjusted EBITDA increased from 19 million in quarter one to 31 million in quarter two 2019. Even with strong numbers, SP tanks. You may notice a trend here. CWEB, year-over-year revenue growth of 45% to 25 million, 75% gross margin produced, gross profit of 18.8 million, adjusted EBITDA of 3.9 million. And the trend continues with regards to SP, it falls. Now for your sector leader. Canopy Growth generated net revenue of $90.5 million in Q1 2020, adjusted EBITDA of $92 million, up $5.7 million versus Q4 2019, increased dried cannabis sales in the Canadian recreational market by 94% over Q4 of 2019, harvested 40,000 kilograms, exceeding expectations in the quarter, an increase of 183% over Q4, increased international medical cannabis revenues by 209%, and filed 56 patent applications in the quarter. Sounds good. And it still wasn't enough. Still 3 to 5 years away from profitability, stock price falls almost 15% and spurs broad market sell-off. I guess that's what happens when you lose $1.28 billion on net revenues of $90 million. This is your bellwether cliff that everyone is taking a leap off. A year ago, Canopy was the catalyst that rose all ships in the sector, and the tide is out. Harv. Total revenue was $26.6 million, an increase of 39% compared to $19.2 million in the first quarter of 2019. Second quarter pro forma revenue increased 53% over the first quarter pro forma revenue of $51 million. Gross profit was $16.9 million compared to $7.9 million in the first quarter of 2019. Gross profit margin was 64% compared to 41% for the first quarter of 2019. And SP succumbs to the same market weakness as everyone else. All in all, it was a bad week for the sector as many companies underperformed their expectations, and even worse when we look at macro environment that did not fare any better with all eyes on the bond market. VFF and Trulieve deserve better as we await more catalysts to move the sector out of the summer doldrums. This video is for entertainment purposes only. Please be aware that none of the content in this video constitutes financial advice. Do your own due diligence. Thank you, and try to leave the world a better place. Please hit like and subscribe if you are so inclined. And remember, there are links to all of the articles in the description for your perusal.